This presentation is an overview of the research and experimentation tax credits in the United States and explains how our specialists at Swanson Reed can help you receive the most credit possible for your claim. The R&D tax credits are a tax incentive for performing qualified research in the U.S., resulting in a credit to a tax return. Credits are post-tax tables. Therefore, the R&D credits result in a dollar-for-dollar tax benefit. Anyone who satisfies the IRS's four-part test and documents their qualifying research expenses is eligible for the R&D tax credit. Here is a look at the IRS's four-part test. 1. Is the work technological in nature? Does the research fundamentally rely on the principles of engineering, physical or biological science, or computer science? 2. Was there improved functionality? This means that the R&D activity must result in a new or improved process, function, product, performance, reliability, quality, or a significant reduction in cost. 3. Was there elimination of uncertainty? This step involves the identification of information that is unknown. You must begin with questions like, can we do it? How do we do it? And what is the correct formula? 4. Was there process of experimentation? Treasury regulations define this as broadly as conventional implementation of the scientific method to something as informal as a systematic trial and error process. The great news is there are no limitations for who can qualify for the R&D tax credit. All industries and types of businesses are eligible if they can prove the four-part test. Some industries will have more R&D than others. Manufacturing, software development, technological innovations, medical, chemical, telecommunications, and durable equipment industries will all conduct more R&D due to the nature of their work than the services, distribution, fashion, and low-tech industries. The R&D work does not have to be successful. By definition, much R&D will be trial and error and prone to failure, though the intent must be genuine and not form a pattern of manipulating data. C Corps, S Corps, LLCs, partnerships, sole proprietors, estates, and trusts can all qualify for the R&D tax credit. C corporations and S corporations both have unique terms and characteristics when it comes to filing the R&D tax credit. For details on C Corps, please search for Swanson Reed's YouTube presentation at SR R&D Credit C Corp. For details on S Corps, please search for Swanson Reed's YouTube presentation at SR R&D Credit S Corp. LLCs have a wider choice of tax treatment options than do other forms of business organization. Early on discussion with Swanson Reed will identify key parameters. For details on LLCs, please search for Swanson Reed's YouTube presentation at SR R&D Credit LLC.